The housing crash that we called continues. Remember, folks, we've been telling you for quite a while now that we are experiencing a housing crash in transactions. Unfortunately, for many people out there, not in price. Today, we got the existing home sales data, and it is exactly what we were expecting. In fact, I put this number out there about 2 days ago. Existing home sales were last month were 4.03 million. They were expected to come in at 4 million based on the experts. And I told you 48 hours ago that I expected it to be 3.93 or 3.94. Nailed it. Came in at 3.93. So why again is this transaction crash important? Why did everyone miss it? Well, again, remember, housing makes up about 12.5% of GDP. The housing market, if you talk to mortgage brokers, agents, title appraisers, yada, 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 has been in a recession or perhaps even a depression for 3.5 years. The good news is, just like I called this housing crash correctly, I am now saying we are just about done with this nonsense. I expect the September existing home sales, which again will be reported in October, just so we're clear, not confusing anybody, will be the month of the turnaround. It will be the first time that we come off the bottom. A monthly housing at 3.93 million is a cycle low. We were above or below 4 million a couple of times last year. This goes by my call of sub 4 million all year. So again, transactions were down 2.7% month on month. We got a couple of more ugly and painful months to get through, but if you're holding on, you're almost there. If you are a home seller, if you are trying to sell a home today, it's tough out there. It's rough. If you can wait till next year, probably not a bad idea. Again, why? Because there are people like me who are going out there and writing disrespectful offers looking for motivated sellers. And based on the comments I am getting on my videos and some emails and Instagram posts, lots of you are writing disrespectful offers and winning. This is what I want for all of you. Remember, get a buy box, do the work, follow up. You make your money when you buy. This is a buyer's market. This is a buyer's market in most of the country. If you are in the Northeast, obviously not so much. But the strategy is simple. We make moves. We make great deals in buyers' markets. They don't last forever. So what else did we learn about existing home sales besides transactions down? Well, folks, prices up. Prices have set a record. Prices have never, ever, ever been higher. We saw a 2% increase in median existing price, $435,300, highest ever. Last year, $427,000. Interestingly enough, the article I read talked about if you were a homeowner for the last 5 years, the average homeowner increased their net worth $140,000 in 5 years. And if you happen to own 2 or 3 or more, those numbers get really, really interesting. It is estimated that if interest rates were to fall to 6%, that 160,000 renters would become first-time home buyers. We are seeing some very interesting things. There are now 1.53 million homes for sale. That is interestingly enough down from last month. Available inventory is down, so the constant rise in inventory has receded slightly. Excuse me, down 0.6% from May. Now for some stats behind the stats. 30% of transactions were to first-time home buyers. If you don't know, that number usually is 40%. So again, below trend. Why? Because we broke the housing market. The housing market's been broken for 3.5 years, just like we called. Cash buyers, 29%. 29% of transactions were cash buyers. It is estimated that 14% were investors. That number is usually higher as well. That just goes to tell me we're not doing crazy things as investors. We are only buying great deals. And if you wanted to be crazy and accurate, you could say the following statement. And I expect some crash bros to say the following. You could say, in May or in June, distressed sales, foreclosures, and short sales increased 50%. If you wanted to be accurate and take the most nuanced data and make it sound scary, you would say distressed sales increased 50%. Now, in reality, they moved from 2% of the market to 3% of the market. But again, crash bros don't know what they're doing. They're just trying to get your clicks, and there you go. As I've been trying to tell you for a couple of years, the reason the median home price keeps ripping higher is we have an inventory mix problem. It is simply mathematics. Here is the latest data as an example. If you look at the low end, we are seeing less transactions. If we look at the high end, we are seeing more transactions. This is how the median price gets ripped higher. Here are the numbers from the data. Go look it up. Total home sales below 100K fell 5%. Total home sales above $1 million rose 14%. This is exactly what I've been trying to help you understand. This is exactly what I have been trying to show with different models. The housing market is behaving exactly like we expected on this channel. But again, remember, if you are a home buyer, your job is to get a buy box, figure out where the motivated seller is, write disrespectful offers, make your money when you buy, make sure it cash flows day one, and follow up, follow up, follow up. Nothing changes just because we got this data right again. On that front, we'll move to some earnings. Looks like Domino's Pizza had some good numbers. Same store sales rose 3.4%. Hilton Worldwide beat top line and bottom line and actually raised guidance. Coca-Cola, I didn't realize this. Coca-Cola has 45% market share and 5 of the top 10 brands. Wild. I had no idea. They beat top line and bottom line. SAP, big European software company, missed on revenue but beat on earnings, saw strong cloud momentum. And then finally, Capital One. Capital One actually increased their provision for bad debt or credit losses by 5x. So either Capital One was grossly under reserved, or they are seeing some horrible data in that credit system. Lastly, Hasbro, toy manufacturer, beat top line and bottom line and raised guidance. Looks like the good news train on tariffs is starting to pick up steam. Looks like a deal with Japan has been announced with reciprocal tariffs at 15%. It was long thought that we were going to aim for 10% after the UK example. It's certainly starting to feel like more and more tariffs will be pegged at 15 if we got 15% from Japan. On the news, Honda and Toyota rally, given that there are now known costs that can be modeled. Looks like Goldman Sachs and Bank of New York Mellon have partnered to create tokenized money market funds. This, again, is an example of what's going to happen a lot here in the near future as the Genius Act takes hold. You are going to see institutions create new offerings. Why is tokenized money market fund interesting? Well, you could move your money into stablecoins, or you could tokenize money market funds and be paid a yield. So again, the financial industry is going to be rolling out a lot more services and whatnot based on the Genius Act. I think we've just started to see the tip of the iceberg. It will be interesting to see where these institution takes it. Not sure if you live or are around Hollywood, California, but if you are, I would love to hear feedback on Tesla's new diner. Yes, apparently Tesla has rolled out an American diner, complete with 2 66-foot movie screens. I don't know if you are old enough to remember drive-in movies, but drive-in movies were very popular when I was young. I remember sitting back of the truck watching movies in blankets and sleeping bags. It was very, very cool. At least as I remember, it was a positive memory. Just curious, anybody out there, take some pictures, tag me on Instagram. I'd love to see what it actually looks like. So if you are in Hollywood, California, you want to swing by Tesla Diner, take some pictures, tag me. I'd love to see what you see. Mortgage purchase applications up again. Shout out Logan Montashami from Housing Wire. Up 3% week on week, 22% year on year. Yes, folks, 22% year on year. This is the 25th week in a row of year on year growth and 12th double digit week in a row. Pretty crazy. I saw a post from Mohammed El Arian that I thought was interesting. Mohammed is actually positioning now that the Fed will hold rates in July and then actually repeat what they did last year in September. If you don't remember what they did in September, folks, they cut by 50 basis points. I actually think that is not unlikely. I think there's a fair chance that July is a 0 and September is a 50 as the Fed gets farther and farther behind. Hey, Josh, thank you very much for the super sticker. Can I put this on the screen? How does this work? Yay, look at that. Thanks, Josh, for the sticker. I appreciate you. Awesome. What else do we got? Lots of other stuff. Oh, GM, General Motors, put out some nasty numbers. They estimate that the tariffs will cost them $1.1 billion in the last quarter and on pace for $4 to $5 billion in costs. That is a big ouch, if you ask me. Looks like there's more and more talk about no tax on primary homes. Think about it, folks. You own a home, you live there forever. If you could sell it without paying taxes, wouldn't that be a good thing? Please know if you live there 2 years, you kind of already have that. You have $250K tax-free or $500K if married. But there are plenty of high-priced markets like the Bay Area, maybe New York, Miami, that if you did lower or take primary home taxes to 0, I actually suspect inventory would rise and prices would fall. Right? If you want to see Palo Alto, California prices fall, take the capital gains to 0, and you will see a lot of old homes listed as they move out, and you would have lower prices, at least for a short while as inventory floods the market. Scott Bessent shared a conversation he had with the Amazon CEO. According to Scott, the Amazon CEO said in the last week, we have seen no price hikes due to tariffs. Interesting. They went out and did a survey of economists. Unfortunately, I was not one of them, but hey, someday. 105 economists, 56 of them said that they expect the Fed to cut in September. By happenstance, that means hold in July. Scott Bessent flexing some numbers on tariffs. Scott Bessent said that we've collected nearly $100 billion in tariff revenue. We are expected to collect $300 billion in the year. And, oh, by the way, in June, we had a federal budget surplus. Yes, folks, June, we collected more revenue than we spent. I don't know what politicians were doing. Maybe they were on vacation. I'm sure they won't let that last forever. Fannie Mae out with some predictions around mortgages. They expect the 30-year mortgage to be 6.5% at the end of the year. Earlier, their forecast was 6.2%. So, folks, at the end of the day, remember, the housing crash is rolling through just like we've talked about for years. It is in transactions, not in price. It is affecting the GDP. But if I'm right again, and in September, real estate rolls out of a recession and starts to contribute positively to the GDP, one thing, we will validate that we've had a rolling recession, which we've been pontificating about for years. And real estate, again, 12.5% of GDP will be a positive contributor going forward, right into the time where most people expect rates to go lower. Things could get interesting. Folks, at the end of the day, I hope you have an amazing day. Remember, if you are a landlord, insurance is getting expensive. I strongly suggest you check out Steadily for landlord insurance. Worst case, they can't help you. Best case, they give you some coverage with better pricing. Again, only takes 3, 4, 5 minutes. I use them each and every time one of my policies come up. Sometimes they help, sometimes they don't, but at least I know better. And again, folks, time to join school. We've got the one and only Casey from Brick by Brick this Sunday. We've got Christian next Sunday. And then we got some special guest speakers for our next ORAT event after that. So hope you guys have fun. Oh, it looks like Steadily helped someone. That's cool. Steadily helped me. Late Start Wealth. That's awesome. Glad to hear it. They've helped lots and lots of people. So guys, take care. Give them a shot. Thanks. Bye.